Hello guys, welcome to the channel. Today we're going to be diving into the injective price, and we're going to be looking at it on an 8-hour time frame, where we can see it going in the short term. So let me just clear my chart. We can identify the trends we've been going in. So we can see that we were making higher highs before breaking down here. We can look at where we had our break and structure here. Is right here. We had a break of structure. So up to that point there, you could see that we were basically going up in an uptrend where we were just going up, higher high, higher low. Oops. Sorry about that. Do that again. So that we were higher high, higher low, 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 higher high, and then we've got a lower low right here. So it broke structure right there. So at that point there, we can see that we've left behind a void at the top of that move, which needs to be filled. So that void for injective is up here. So we can see we left behind this void, which is an imbalance in the market. We can see after we've broke that, by the way guys, when we leave voids behind, we always come back and fill them. So we've gone down in this downtrend, another wedge that's gone straight down, and we've broke structure. We broke out of this trend. And right here, we see we've gone, I'll show you the same pattern that's gone on. We've gone lower low, lower high, lower low. We've actually, it's probably more like this. We've gone lower low, lower high, and right here, you can see that we have had right there is what we call break of structure, right there. So when we've done this move, we've left behind an order block that needs to be filled again at the bottom of this move, which is down here. That needs to be mitigated, guys. Whether it gets filled now before going up, but for me, I would be looking for an entry around here, a retest of here. And I'd love to pick up some ends around at $20. 19.96 is that. I'll try to get into $20 and then sell at 32.29. And then once we break this price here, I'd be offloading my positions here. And once we get a break of this, and then we get the retest, that's where I'd be re-entering. But I'd need that confirmation that we break through before we go up. These don't usually break on a first time either, guys. Usually most times when you come up to an order block, you're likely to see something like this before it comes up. which can take some time. So you don't want your money locked up sitting in the market. It could even do something like this, and you're just holding that bag the whole time. So that's why you want to offload some of your position, whether it's 50%, whether it's 20%, it's completely up to you. But yeah, this is what I'm looking at. So we can see that last time it took us for this crash to the, yeah, that's another thing. So it's the order block that it usually comes to fill at the bottom of the move. So we can see that when we broke this trend here, it took us $23 days to break that trend. So to get up to that same price, we're looking at 23 days from here. If it's a similar move, would bring us out to January the 25th is what, so we're going to be looking at something like that's if we follow a similar move to here. We could probably draw a trend line, be something like that. We want it to come down to 20, whether it's a wick or whether it's a candle down there, it doesn't really matter. We could just wick straight down and bounce up. This trend line isn't reliable, it's just a gauge to show you guys sort of what we'll be following, but we do need to form this bottom first. We are getting a reversal signal, which is good. We can get multiple, like you've seen here, printed before we go back up. It's not always straight away, but the fact that we just keep putting in higher highs and higher lows is the important thing. So we can see we've gone the low there, we're putting in a high low here, and we can come all the way down to 1936 and still keep an uptrend. So that's important, because if we do break below that 1936 area, which is down here, that would mark a break of structure, and that is when you would be more likely to see that's the break structure, and then you'd probably see a retest and then further downside. But I don't expect this to happen. It's the bull run is close and we are trending up, and you can see on a daily time frame as well. Let's move myself to the side. Remove the drawings. You can also see on the daily time frame that we've done a similar thing. We've gone on this big, massive surge. Oop. See, we're in that massive surge for INJ that went straight up, and we had that break at the trend line, and we've basically since then get rid of that. Since then, we've just basically been going down in this other downtrend right here. But you can see right here was actually our breaker structure, where we put in our first higher high. We're basically going down. We're going down and just trending downwards. And here is when we went higher low, and we put in our first higher high, which is that's when you look for your buy, which is down the bottom. You look for your imbalance in the market, which was down here. So you might entry was right there. Just sniped an entry right here. And now we're basically putting in higher highs and higher lows, which is the start of this uptrend. We can, like I said, guys, we can come like that, or we can go like that. It's all dependent, but that sort of looks like what we're doing at the moment is this trend line. If I match that up there, get rid of all this. It's a bit messy. So we can see that we're putting in this price now. We can already see that we broke on a smaller time frame as well. We broke this structure here. So that's the order block down the bottom. So we can see that our next entry here, if we want to get in now, it's actually already been on the daily, but that's these are pinpoint positions. So we can see you don't trade on the breakout, you trade on the retest of these imbalances in the market. And that's basically how I trade. And then we can see that our imbalance is right here, which is pretty similar to the 8 hour how I just showed before, at the top of the trend. And that's where I've said on the 8 hour as well as the daily, which are both matching up, that's where I want to get rid of some of my position. And then I'm expecting a pullback from there, and then it could just keep going for a while, and then we get the breakout, and we don't enter here on the breakout. We enter right here, and then we ride it. That's not pretty, but that's basically, it's just to save holding the bags. And I've repeated, like, this could be a local top that we come back and retest just for confirmation. We keep the uptrend, and like we could go something like that, and it just comes back and retests that top. So it's up to you whether you want to hold down, say we get to 32 and say it pulls back 17%. If you want to hold it back for 17%, it's up to you, but it just doesn't make sense to do it that way when I've been in crypto for years, and I've held coins, and I've been so about the technology and how amazing it is and how it works. But at the end of the day, the technicals is what's important. And if you follow the technicals and you stick to them and you stick to your plan, you're going to get pinpoint trades, and you can the market is just super predictable when you realize what's going on. All these institutional money zones and liquidity that needs to get swept up in these areas, exiting the leverage traders in the market. It's once you learn and figure that all out, that's when you really start to have success. So this is the INJ update. So like I said, January 25th, around that area, we should be looking to be around 32.15 to 33.46, and that's when we'll be exiting our INJ position for now until we get that break of structure, which I'll keep updated with. Thanks so much, guys. If you like the content, please like and subscribe. This is not financial advice, and stay tuned for the next episode. Thanks so much. Bye.